In ideas for profit today, we're asking, is Ujjivan SFB a good stock to buy, and should you bet on Ujjivan SFB? Now, the fundamentals that shape Ujjivan SFB's immediate potential, with the worst seemingly over with the COVID-19 pandemic, the economy is limping back somewhat to normalcy, and the prospect of a COVID vaccine is also in sight. It's time then to take a relook at Ujjivan SFB stock and its immediate prospect. Now, the financial health of Ujjivan SFB, despite a significant dip in collection efficiency, which nosedived to around 16% in the month of May, the company has been able to make steady improvement in its collection efficiency, which rose to 88% in the month of October. Now, Ujjivan's collection efficiency stood at 93% during the pre-COVID level. The other big factor that has played in its favor is its asset quality. Even now, with the Supreme Court a waiver of interest during the COVID-19 pandemic, the gross as well as the net NPA stood at 1% and 0.1% during the second quarter of the current financial year. Now, the current situation is nowhere close to the time post demonetization, when the gross NPA had shot to over 6%. Further, the bank has also kept aside rupees 299 crores or 2.2% of the advances as COVID provision to offset any delayed payment. And it can always go for the restructuring option in case of any temporary setbacks as well. Now, the bank is also adequately capitalized with capital adequacy ratio of 31%, which is about 30% in Tier 1. Now, over the years, the financial institution has also diversified its asset book. While at the time of inception, around 97% of its assets were for micro lending, it is now down to 74.5%, along with the addition of secured lending products. Now, the bank saw a steady decline cost to income ratio from 76% at the end of FY19 to 57% at the end of the second quarter in this current financial year. Future growth areas. Now, the bank wants to grow almost 10 times in the next 7 years, with NBFCs in a tricky situation and not in a position to increase its disbursement portfolio. Once the business cycle is back to where it was before the pandemic struck, Ujjivan can step back on the growth pedal and grab the market share. The deposits for the bank now stands at 73% of the total resources, and funds also comprise of 78% of assets, which is a key factor in ensuring that the bank can now offer a better deposit rate to its customers and continue to maintain its net interest margin. Now, close to 60% of the bank's customers are from metropolitan as well as urban areas, where the impact of the COVID-induced lockdown was relatively more. 62% of the assets came from states like Tamil Nadu, Karnataka, West Bengal, Maharashtra, as well as Gujarat. With restrictions now more or less over, these areas are expected to see a spur in lending activities. The risk factors: 23% of gross advances of the bank comes from the states of Maharashtra, West Bengal, Assam and Punjab, where the collection ratio stands at 79%, 78%, 74% and 83% respectively. It's less than the overall average of 88% and far below the pre-COVID figures of 93%. Though the bank's disbursement rose from 474 crores in the first quarter to 1458 in the second quarter, a significant decline in earnings in the current financial year is very much possible because of the higher credit cost. On an average, the bank generally disbursed anything over 3,000 crores in